It feels as though you probably are going to echo what Steve Paliuka, what Reid Hoffman, what Ed's just been saying, that we're just at the beginning with this 4 trillion number.
I mean, definitely. The numbers are not surprising right now. And when you're looking at the on a valuation basis, Nvidia is not necessarily much more expensive today than it was a year ago. The PE ratio is totally acceptable. It's around 52. But with the upcoming earnings, we think that's going to be pulled back to low 40s. And 4 trillion number, it incorporates not only what Nvidia achieved so far, obviously, yes, but also what it will be achieving. And they're proactively searching clients and expanding their client book to other continents and to other sectors like robotics is very interesting. We actually think that robotics is going to be the next big milestone because giving AI hands, feet, and a body is just going to be amazing. We are just at the beginning of this AI revolution. It's just so exciting.
Wall Street took notice of Nvidia's recent big win. The U.S. government is finally granting licenses once more after export restrictions put a halt to chip sales to China for several months. Nvidia can now resume its core business of selling high-end AI gear on a large scale. Rajvindra Gill of Needham quickly updated the figures. The company maintained its buy rating despite raising its price objective to 200. Why? As a result, Nvidia can now start shipping its high-performance H20 chips, which had $2.5 billion in sales blocked earlier this year, and an additional $8 billion in orders paused for the second quarter. Needham's base case projection, with the green light restored, is $3 billion in H20 sales each quarter beginning in October. Not to mention the new Blackwell GPUs, such as the B30 and B40, which are anticipated to be available in China by late summer. From advancing the boundaries of cloud computing to powering data centers and driverless cars, Nvidia has been the clear leader in AI chips. This reversal affects the game, even though the export ban somewhat slowed the momentum. This is more than simply a quarter for investors. It's a reminder that Nvidia's global demand story, especially from AI-hungry markets like China, is far from over. Nvidia has received more attention than any other firm in the last 2 years. Investors have been won over in a spectacular way by the leader in graphics processing units, GPUs, that facilitate AI training. This leading AI stock has increased 1,190% in the last 5 years alone. For comparison's sake, the S&P 500 index is up just 95% over the same period. Investors are obviously captivated by the company and think it will remain successful as an AI-driven technology revolution develops. But with shares at their highest point ever, is Nvidia still a good investment for new investors or those wishing to expand their holdings? It is hard to overestimate the demand for Nvidia's data center GPUs. The company's overall sales grew at a compound annual rate of 64% from fiscal 2020 and fiscal 2025. Additionally, the top line jumped 69% year over year to $44.1 billion in the first quarter of fiscal 2026, which concluded on April 27th. Nvidia's strong pricing power contributes to its impressive profitability. Last quarter's net income was $18.8 billion, and during the previous 5 years, the company's net profit margin has averaged an impressive 36%. Only because of Nvidia's established dominance in AI has this remarkable financial performance been feasible. It has established itself as the top picks and shovels game, assisting in the creation of the AI framework that will serve as the foundation for platforms and applications. Ultimately, Nvidia shareholders will profit as long as the AI sector as a whole keeps growing, so they won't have to decide between OpenAI's ChatGPT, Anthropic's Claude, or Alphabet's Gemini. After the U.S. government approved Nvidia's application for export permits, the firm recently announced that it should soon be authorized to export and sell its H20 chips in China. According to management, last quarter's H20 revenue loss of $2.5 billion was caused by current export limitations. The recent approval shows how dynamic the trade situation has been, even if it is a good thing because it reopens a significant market for AI chips. As AI technology is increasingly seen as a topic with geopolitical implications, the tight relationship between the U.S. and China may still have an impact on Nvidia's company in the future. Additionally, the Trump administration is willing to alter policy at any time. One should not overlook this risk. Additionally, it's unclear how all of this AI spending would be affected by a potential recession. Executives will probably reduce their capital spending plans if the economy worsens, which would put pressure on Nvidia's sales. Few stocks have experienced such a parabolic rise as Nvidia's. After all, shares have increased by about 17 times in the last 5 years. Nvidia keeps proving the doubters wrong, even if you believe the firm has become too big, or that its market capitalization, which is at $4.2 trillion, cannot increase further. Similarly, it's difficult to think that the current valuation is still fair. Investors can purchase the stock for a forward price-to-earnings ratio of 30.9, even if shares are trading at an all-time high. Between fiscal 2025 and fiscal 2028, earnings per share are expected to expand at an annualized rate of 32%, according to the average analyst estimate. The premium valuation appears much more realistic at that rate of growth. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video. Even though Nvidia's stock is trading close to record highs, the company's dominance in the market, remarkable growth, and sizable margins make the case for purchasing the stock strong. At some point, every business hits its pinnacle. Could it reach $5 trillion, or are we just seeing Nvidia's? Although it is difficult to answer, the company believes it can, and there is still much more to be gained from the explosion of artificial intelligence. Recently, the U.S. government promised Nvidia that permits would be given and lifted its export restrictions on the company's GPUs to China. Many analysts revised the stock price objective as a result of this shift. In 2024, China brought in $17 billion for Nvidia, or about 13% of the company's overall sales. Chris Versace, a seasoned fund manager for the Street Pro, says, "In light of this news, we are raising our Nvidia price target to $200 from $185 and reiterating our 1 rating." The business wasn't idly waiting for this miracle in China. In Europe, it was taking action. On its blog, Nvidia announced the launch of the University of Bristol's Isambard AI supercomputer. It is powered by Nvidia Grace Hopper superchips, which provide 21 exaflops of AI performance. Although the 5448 GH200 superchips in this supercomputer are amazing, they are not as powerful as the Jupyter supercomputer, which was unveiled in June. The Grace Hopper platform, which has about 24,000 GH200 superchips, powers Jupyter as well. It is the fastest in Europe, with an anticipated performance of more than 90 exaflops. At some point, the pace of acquiring new clients for supercomputers must slow down. Nvidia is aware of this and is placing a wager that robotics will be the next big thing. Nvidia's next platform for humanoid robotics and physical AI is called Jetson Thor. The company claims that it will be able to provide up to 2070 FP4 TFLOPS of AI computation. This platform has a 2560-core Nvidia Blackwell GPU and a 14-core ARM Neoverse V3AE 64-bit CPU. The fact that a CPU is required to run the software that uses GPUs for calculations is something that is frequently overlooked in the craze surrounding AI GPUs. For this embedded Thor platform, Nvidia must rely on ARM since it lacks its own CPU architecture. The same is true of its Grace superchips, which feature 72 high-performance ARM v9 cores for the CPU portion. Nvidia attempted to purchase ARM, but regulatory issues stopped them. It's possible that licensing expenses were the main driver for the purchase. At the RISC-V Summit China, Nvidia hardware engineering VP Franz Seistermans introduced his Enabling RISC-V Application Processors in Nvidia Compute Platforms presentation, announcing the arrival of CUDA and RISC-V. An open-source instruction set architecture is called RISC-V. This implies that anyone can create a CPU using it, and the business does not need to pay for the license, albeit the business that creates the RISC-V compliant design may do so. According to RISC-V International, this port will allow a RISC-V CPU to serve as the primary application processor in a CUDA-based AI system. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.